Hi guys, I just wanted to do a quick video about stamp duty and capital gains tax. So there's been a lot of talk online and in some of the property media about Labour's plans for the autumn budget and how that's going to affect the property market. The key sort of point from that is probably going to be capital gains tax, but I think a lot of people are missing out on the fact that stamp duty is actually going to be changing in the end of March, early April next year, 2025. So at the moment, we've got the old stamp duty regime, which is from 0% to 250. You're not paying any stamp duty on a property that you're purchasing at all. If you're a first-time buyer, obviously that's coming into play. If you're an investment buyer at that price range, that's coming into play. That will be changing from March next year, or end of March next year, early April. We'll be going back to the old regime, which is up to £125,000. It will be 0% stamp duty, but then above 125,000, sorry, not 1.25 million, 125,000 up to 250,000 is going to be a 2% stamp duty applied on that part of your purchase. So if you're purchasing between that figure, you're going to be paying 2% stamp duty. If you're purchasing above that, you're going to be paying 2% on that portion of your purchase, and then 5% above 250,000 up to 925,000, which is what it is at the moment. So there is a difference there. You know, that extra 2% between 125 and 250,000 is going to make a difference to affordability for buyers at the lower end, because it's going to be a 2% levy on what they can afford to purchase effectively. So if you're selling, you've got to take that into account and hopefully try and sell, you know, prior to that, and the same if you're a buyer and you're looking to purchase in that price range. You know, get out there and make your purchase as soon as you possibly can if you're able to. Obviously get the right advice from a mortgage advisor and financial advisor, but certainly that's something that you should be bearing in mind, and a lot of people haven't realised that that's coming you know, next year, as I say, 1st of April onwards. The other point to make is capital gains tax. So a lot of talk about capital gains tax. Capital gains tax is basically a tax that you pay on assets that you're selling, including property and other things as well. It's quite a complicated area, and it's very specific to different circumstances, but basically that's what it's there for. So if you're selling a second home, or you're selling an asset that you've made a gain on, then you will be paying tax not on the sale price, but on the difference between what you paid for it and what you're selling it for. And potentially the Labour government are going to be making changes to that and announcing those in the autumn budget. So at the moment, the threshold is dependent on your income level. So additional rate taxpayers at the moment are paying 28% capital gains tax and on residential property, and 20% on other assets. Basic rate taxpayers are paying 18% on property and 10% on their other assets. So there's potential for the government to change things. So they've committed to not changing or not increasing taxes in general in their manifesto. So there's a thought that rather than changing the rates of tax for capital gains, that they'll be changing the way it's applied. So trying to catch more people within the capital gains tax regime than they have done previously, without necessarily changing the rate itself. So one of the things they could be doing, that you have an allowance, as you do with a normal income tax allowance. You have a capital gains tax allowance, which at the moment is £3,000 per person. There are also allowances and exclusions, if you like, for when you transfer property between spouses and civil partners and things like that. And they may be doing away with those altogether. So they may be getting rid of all the allowance completely, or they may be getting rid of exclusions, or both. And that will obviously have an impact for people selling property that has capital gains tax applied to it. In addition, they may consider changing the rate or restructuring the rate, but not changing the rate itself. So as I mentioned before, higher rate payers are paying a higher rate of capital gains tax, and lower tax ratepayers are paying a lower capital gains tax rate, they may set that at the higher level for everybody, in which case everybody, regardless of your income tax rate, are going to be paying the 28% capital gains tax. So in theory, they've not technically changed or increased the tax, as they said in their manifesto, but they've changed the structure of how it's applied in order to obviously get more people to pay capital gains based on that. So lots and lots of stuff to come on that. It's not going to affect everybody, but obviously if you are selling property, including commercial property or property that's owned by a business or under the umbrella of a business, it could potentially affect you. So it's something to watch out for. It's still not likely to be applying to personal property, your personal residence, sorry. That's still obviously protected from capital gains tax, but any second homes, investment properties, that sort of thing, potentially will be affected by any changes which they are due to announce in the autumn budget, which I believe is due on the 30th of October, or certainly the end of October. So bear that in mind. Again, any questions or queries along that front, if you need any advice at all, do get in touch.